Hi, I'm attorney Bill Bronchick, and in this discussion, we're going to reveal the 4 different ways that you can elect to be taxed as an LLC or limited liability company. Now, why do you have to elect to be taxed? Well, a corporation, unlike an LLC, has a designated return. So if you're filing a C corporation, 1120, an S corporation, 1120S, a partnership, 1065. An LLC does not have a designated tax return. Now, what you have to do is choose how you want to be taxed as an LLC, and there are 4 different ways. Now, by default, there are default rules. So if you're set up this way, then by default, the IRS is going to tax you this way. And if you're set up that way, the IRS by default can tax you another way. But you can elect out or opt out of any one of those defaults anyway and choose the one of 4 ways to be taxed. So let's look at those. The first is what we call a disregarded entity. And that's when you have only one owner or one member of the LLC. And it doesn't matter if you have a manager or no manager. If you have one owner, one member, by default, you are, quote, disregarded for income tax purposes. What does that mean? Well, it means is the IRS is going to ignore the LLC, the form. You don't have to file a return for it. And then you would report all of the income and expenses on the single member owner's return. So if that were you individually, personally, then you would report it on your personal return. If the sole member was, let's say, a C corp or an S corp, then it would report the income and expenses on its return, not on the LLC's return. The LLC doesn't file a return. So if you're a single member, and let's say you're doing an ongoing active business, you're buying and selling things, you're consulting or whatever, you're earning income, you'd file Schedule C. Schedule C on your personal return. That's a self-employed business. If you were doing, let's say, rental properties, that would be Schedule E for your rental property income, and so forth. Okay? So as a single member, by default you're disregarded, but you can take an election to be taxed another way. So there's 3 other possibilities. Now, one of them would be partnership, but that doesn't work, does it? You've only got one person. How could you be a partnership? So you can't be a partnership. But you can be either an S corp or a C corp. And you do that by filing certain IRS forms to make the election. Number 2, you can be a partnership. And that requires 2 or more owners. Now, what's an owner? An owner is a taxpayer. So if you are one member and another single member LLC with you as the owner is the other member, would that be a partnership? Think about it. The answer, if you got it right, is no. Because the partner is a disregarded entity and is essentially you. So you've got you and you. Unless you have split personalities, you don't have 2 separate tax ID numbers. Okay, so that can't be a partnership. But you and another person, A and B, or A company, B company, or A individually and B his S corp. Those are 2 separate individual taxpayers that make up a partnership. And in that case, you would file, like we said, Form 1065. Now, what about husband and wife? This is a tricky one. Husband and wife can elect either way. By default, they would be a partnership, 2 people. Or they can file as disregarded, as a joint sole proprietor, so to speak. You can do it either way. You can be a partnership for tax purposes, or you can be disregarded if you are husband and wife only. Okay, 2 unmarried people cannot do that. Okay? And I presume, by the way, that would also apply to husband and husband, wife and wife. According to the United States Supreme Court, you'd have the same benefit. Okay, number 3, you can be a C corp. Now, as a C corp, you're going to file IRS Form 1120, which is the same as any regular C corporation. And that could be 1 member, 2 member, 3 member, 10 member, 20 member, doesn't matter, as long as you have at least one. And then the 4th is you can be an S corp, which a lot of people elect for, and you'd file 1120S. So to sum it up, if you are one person, you can be disregarded, you can go C Corp, you can go S Corp. If you are partnership, you can go, two or more people, you can go partnership, C Corp, S Corp. Okay? So you have to, by default, a single member is disregarded, and by default, two or more people are partnership. And you can overcome those elections by filing forms with the IRS, and that would be Form 8832, and then you can change a partnership into a C Corp, or a disregarded into a C Corp. And then if you wanted to go S Corp, you'd file 2553, which makes the C Corp an S Corp, and so on. Those are the different elections available for you as an owner of a limited liability company. I hope you've enjoyed this discussion. Visit my website at legalwiz.com if you have any further questions.